by the end of next year, we should get to about billion wallets. The point being is this scaling is going to continue, and I think it's going to keep accelerating. So what does it mean for all of us? Really simply, this is a $3 trillion industry today. It is going to 100 trillion by, let's say, 2034. 100 trillion from 3 trillion. Maybe I'm wrong by 50%, and it's a $50 trillion industry. If it's 100 trillion, we're only 3% of the journey. So all of you who say, oh, should I be buying Bitcoin so high, or Solana or Ethereum? 3%. It is going to 100 trillion or 50 trillion. It'll be the largest accumulation of wealth in the shortest period of time the world has ever seen. It is a mass redistribution of wealth.
Crypto is on the verge of a massive explosion in value, and AI-driven transactions are accelerating adoption at an unstoppable pace. That's the latest insight from Raoul, veteran macro analyst and CEO of Real Vision. Crypto adoption isn't just growing, it's going parabolic. Wallets are multiplying at an unprecedented rate, with projections hitting 1 billion by the end of the year. But there's another game changer: AI agents. These digital entities need a frictionless way to transact, and blockchain is the solution. Pal emphasizes that while the crypto market sits at $3 trillion today, it's on track to 100 trillion. The wealth shift is happening fast, and those paying attention are in a prime position to capitalize. Raoul is about to break it all down. You won't want to miss it. Oh, and only a small percentage of people watching are subscribed. So if you want to stay ahead of the curve, hit subscribe. It's free, and you can always change your mind later. Now let's get into it and hear from Raoul.
In front of us lies the largest wealth generating opportunity of all time, and we're only 3%. If you just think of a little scale, we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us. Your game is to hold on to your goddamn tokens from $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns. As of a asset class that produces la-la land returns anyway, you don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years, a down 70 or down 80% market, you'll feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them, and your wealth will be compounding. I had dinner last night with a friend of mine who invested first Bitcoin at $3, and he still holds it to this day. He's now become one of the richest people in Silicon Valley. He just did this one trade, didn't really do anything else. So that's one thing. The other thing is, once you're in this space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1,000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You know, your holding in Bitcoin, Ethereum, and Solana just has only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the mega trend. Rule number one: don't lose control of your tokens. And that brings you into, okay, so how do I asset allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, stupid, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. So it becomes very difficult to even justify starting a business, which is a bit weird. But really, how I prefer to see this space is it's a broader adoption than just Bitcoin. Bitcoin is one of the big use cases, but it's not all of the use cases. And so I would just take the three most prominent coins of the moment, which is Bitcoin, which is, let's call it the pristine collateral, the security, the safest asset. I would take Ethereum, which is the broadest, deepest asset. And I would take Solana, which is the new fast entrant that is rapidly gaining massive adoption effects. Hold those with 80 or 90% of your portfolio and do nothing. Just don't need to do anything. Then there is that inner degen inside of you, that part that wants to trade other stuff, that wants to trade in memes. Well, do that with the 10% of your portfolio. I pretty much guarantee, because I've tried this a couple of cycles now, that bag of investments is usually worth about zero at the end of it. You've had a lot of fun, but you've lost all of the money in it. But you'll be more than offset by your major allocation. So it's things like this that are really, really important. Is don't use leverage, because leverage means when the price goes against you, you lose your tokens. Don't buy stupid, don't go too far out the risk curve with too much, because if that token doesn't work, you've lost control of your money and your ability to participate in the big trade. Don't FOMO into stuff because you don't understand it either. You don't know, you don't have an edge, don't pretend you do just because your mate told you. You know, the reality is that every time a friend of mine tells me to buy some meme coin and I'm in a weak moment, maybe I'm tired, maybe I'm hungover and I buy it, it usually goes down 80% almost immediately. So don't trust your friends either on their tips, because they're not very useful for that. But these are really the important things. The other thing is, how else do you lose your token? A lot of people look for yield. And I don't have a problem per se with yield. I've never been a yield guy. I'm a macro guy. I'm a price guy. But yield, if you're putting your tokens in control of somebody else to generate returns and you don't know where the returns come from, it probably works for a period of time, and then at some point it may well blow up. And then you've broken rule number one. You've lost control of your tokens. So you need to be really careful with leverage.
Crypto is a long game. The biggest challenge isn't picking the right coins. It's having the patience to hold them. Markets go up and down, sometimes by 70 to 80%, but history shows those who stay in the game come out ahead. According to Pal, the worst mistake is trying to outsmart the cycle. Using borrowed money or leverage, chasing hype, or constantly trading usually leads to losses. The people who do best are the ones who invest, hold, and ignore the short-term noise. A simple approach works best. Buy Bitcoin, Ethereum, and Solana, 3 of the most established cryptocurrencies. Keep 80 to 90% of your investments in these. If you want to take risks, use only a small portion, because other bets always fail. Now here's more of what Raoul Pal has to say.
So we're going through this profound period of change where first we're going to get this super acceleration of productivity, of asset prices, something we can really participate in, beyond which it becomes a very dark world I call the economic singularity, which I don't think of as a pessimist. I don't know what this means for us and how we're going to figure it out. So I kind of figure out we've got 5 or 6 years to a future to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible. You'd rather go into this with your lifestyle covered, your future secure, and then we can figure out this complicated future. What I don't want to be doing is figuring it out while launching a new business in the early 2030s and everything has changed. We can see it ahead, like the steel mills in Sheffield in the UK or Pittsburgh in the US. We can see that these things are going to be closed down. We can see there's immense opportunity before it happens. So that is the ride we're on. This is one of the key things for crypto. I try and tell everybody, it's like, I don't care whether you believe in, the libertarian angles. I don't care whether you believe that the technology is not for you. What you need to believe in is your future. And this is the only opportunity you're going to get to do that in this period of time. People need to understand what is going on here. This is not just Bitcoin and a pristine collateral layer. It's not a bunch of cryptocurrencies that people are trading. What this blockchain technology is the security truth layer to the internet. Without it, the internet cannot progress with AI. AI, we're bringing in something we've never had before, non-human activity. Non-human activity and human activity will need to prove what is what and who is who. But also, as we go increasingly digital, tomorrow is always more digital than today. Every contract that we do, all of this stuff, and humans live by a system of contracts, whether it's tickets, agreements, everything, even me turning up on the Zoom call today is a contract. All of these contracts, some have value, some don't. The ones with value were generally done via paper and some sort of ledger system of which somebody notarizes it, if you think about a property. But what we're moving towards is a way that we can do this digitally in a way that is trusted because there's no central party in the way. And so this scales everything from ticketing to value to artwork to money to everything. This blockchain also proves who is a human, who isn't. So we can prove these things. It's a proof layer that is distributed amongst thousands or millions of people that confirm what is the truth, as opposed to one trusted party. So this scales as AI scales. It has to. Without it, we couldn't have AI, or we would entirely break society, money, and everything else. So even if I just take the trend rate of adoption, I think you've got this chart. The trend rate of adoption of wallets keeps increasing every day as new people start to use this. Now, as I said before, I've compared new wallets to IP addresses. I rebased them in the past back to 5 million as a starting point for the internet. It was at 92, 93, and I did 5 million wallets for crypto. Now we've all got multiple IP addresses, we have multiple wallets, so it's pretty like for like comparison. You extrapolate that out, by the end of this year, next year, we should get to about billion wallets. Okay, that's a lot. And now how many users? Well, that's a matter, Jamie, you're more qualified than I am to figure out what the exact number of users are. But the point being is this scaling is going to continue, and I think it's going to keep accelerating because now we're bringing these other economic actors, the AI agents in. Thinking about this for people who are not quite sure, because blockchain and crypto have lots of narratives and people latch onto different ones. The one that I found resonates with people who are not in it on the money side, but just want to understand the technology. This is the new version of the internet. It's called Web3. Whether that name changes over time or it sticks, it's irrelevant. But the point being, it's just the new version of the internet that we need for the present times. The internet was the greatest technological boom of any of our lifetimes, and one of the greatest inventions of all of humanity. Is a way of humanity coordinating humanity in the digital age. It created pretty much the digital age. Now, none of us could participate in that. It was a public service utility good that made a bunch of VCs and a bunch of companies very rich. It didn't really do anything for us. Our lives got better in many ways and worse in other ways, and it got more convenient, but we didn't participate in the wealth. Think of all the wealth that got generated in Silicon Valley, where I am today. I mean, there is staggering wealth here. And most of us didn't participate. We became their product. Now here, the magic is how blockchains work is they have an economic incentive system, which is a token. And that economic incentive system incentivizes you to use a network. And the more you use the network, the more of these tokens you get, and also the more they go up in value. So you've got this economic incentive. So if you think about it in other terms, imagine when Facebook launched in 2012, imagine if they'd given every single user a Facebook share. What would be the value of Facebook, and how much wealth would it have created for humanity? This is what this technology does. It is incredibly powerful economic incentive machine to bootstrap the next version of the internet in record time. That next version of the internet gives us almost infinite use cases, whether it's to do with money, the entire global financial architecture, whether it's to do with value, whether it's to do with ownership, whether it's to do with identity, or whether it's to do with AI and economic systems that are yet to emerge. That's what it's here for. That's the infrastructure that is being set up. That is why people are making money out of this as we start hitting adoption curves, as we're testing out these new technologies for mass scaling. It is an extraordinary time to be alive. The other thing is, this is a bearer asset. What a bearer asset means is you need to take control of it yourself. Now, you can keep it on an exchange, and I think the big exchanges, the very big global exchanges, are relatively secure. But the beauty of this asset is you can be outside of the system by storing it yourself. And that is storing yourself on something like a ledger device. Doing that gives you the maximum flexibility. Yes, it can be a bit terrifying, but the key is not letting somebody else take control of your coins. Again, you'll be so upset if you don't have your tokens and you lose them because you got hacked because you were storing them on your MetaMask wallet and you went to a website to buy some stupid meme coin and it was a scam. You've got to be really careful. This wallet cleanliness, separating your assets, using a different wallet to operate in the Web3 world versus a different wallet where you store things safely. Do these things and you will increase your probability of not. We will all get something wrong somewhere. So don't worry about that. But this is my kind of recipe for the highest probability of success, where I can bring as many people along on the ride as possible. And that would make me very happy indeed.
The first internet boom made a handful of people in Silicon Valley insanely rich, while the rest of the world got left behind. This time, blockchain changes everything. It turns users into owners, rewarding participation with real economic incentives. The networks grow, and so does the wealth of those who help build them. Pal also notes that Bitcoin proved digital scarcity has value, while Ethereum unlocked a decentralized economy. Now, blockchains are powering the financial system of the future. Everything from banking to identity to AI will run on crypto networks, and those who get in early will benefit the most. Before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.